What's up, what's up, what's up? How are we all doing on this fine Monday? Today we are, of course, showing you our Sunday outlook. We post it every Sunday. We talk about it on the Monday. So, as always, we're going to be looking at Euro and Gold. These are the two main pairs that our community and myself as a trader focus on throughout the week. So first things first, thank you everybody for all the support on the last video. We really do appreciate it. Like I say, hitting that like button and dropping us a little comment really does help us reach new people that this can help. And it also lets us know that you appreciate the content that we produce. We will keep making videos if you keep watching them. So of course it is something that works for both and it's completely free. So all of the links are in the description down below. If you would like to check out any of those, then feel free to do so. But let's get into what we are looking at this week. So first of all, we have our euro to the US dollar markup. Now, of course, if you want to read the literature or follow along with these posts, then the link for the trading view is down below, and you can, of course, look at that in your own time. But for this week, we are looking for price action to continue in the direction that it showed us that it wanted to travel in last week. So this is the chart that we have. This is of course the 4-hour time frame, and you can see that we posted this yesterday, 13 hours ago. So like I say, if you want to go and read the literature for that, then you can, but we're going to walk you through it here on the live chart. So we are here on the 4-hour, as you can see, and last week we created a ton of liquidity across the highs, or sorry, the week before that. And then we took that liquidity out with a pretty strong push on Friday afternoon. So coming into the week that has just passed, we pushed up higher again and ultimately consolidated for the rest of the week. We didn't really expand anywhere. We had a couple of nice sell-off moves, but we didn't really expand in any direction that was clear. So we had more of a sideways movement. Now, based off of that, we are looking at this sideways movement as more of like an inducement-based movement. So not necessarily something that is essential for the price action to do, which is accumulate orders. Now we know that it needs to accumulate, but we're looking at this as a liquidity based movement. Now, in terms of this, that brings us to the next part of our overall markup and what we're looking at, which is the idea of price sweeping the liquidity that is placed above the high right here, meeting that highest point, and potentially giving us a sell back down into this overall range that we have established. Now, we did pull back down to the 50% as we spoke about last week. This is our 50% line. We hit it and price actually reacted relatively well and pushed back up towards the highs. Now, like I say, unless we were shorting this last week, there wasn't a huge amount to jump on. Lower time frames, of course, had some areas that you could follow on and take some trades within, but ultimately we only really built liquidity. Now, after the sweep of liquidity on this low end at the 50%, we played relatively slowly for the rest of the week. Now, because of this, I believe a lot of people were trying to follow on from this short directional movement here, and that this area is relatively rich with stop losses. Now, of course, you guys know the retail side of the market generally doesn't let go of positions very easily, and ultimately they will have held those all the way through the weekend, meaning that they will still be sitting there with their fingers crossed right now, hoping that this drops down. Which is why it leads us back to the idea that we have price pushing higher into this upper area. Now, we do have some areas of unmitigated price action, but we're looking at the principle of liquidity being stored at this high. So this is the first high in this trend line movement. So this would be the buy side origin overall. So price will come back, and from this point I'm looking for the following: either a solid continuation up to take out the high, because we know this high stores liquidity as well, or a clear breakdown and reaction to bring us back into the range. Now, if we do establish a movement back into the range, depending on what forms here, if we push higher, depends on whether we expect to pull back for continuation, whether we'd expect a sweep of a low, or whether we'd expect a full pushback into this area of demand to then continue that bullish push to the upside. So remember, it's the structure that's formed here that is going to depend on what we'd expect to see when we get here, if we get there, of course. Remember, everything that we walk you through and all of the points that we explain to you guys, they're all completely subjective because the market realistically doesn't have to play into any of these directions. But if we begin to see one of these playing out, we can start looking to capitalize on it. Now, of course, we do have potential for dollar weakness as the economy itself is on a bit of a rocky path at the moment. So seeing a bullish projection on euro is completely feasible, and it's something that definitely could be on the table. So that's why we have a clear route to the upside. Now, of course, if we don't get up into this area and we completely fail down, the next area we'll be looking for is our area of demand at the base, where we'll be looking for a potential pullback. So it'll either be a pullback within the range that's established here to then sell again, or we'll be looking for this area to completely fail and price sell below the lows. So mainly it's a very key point of where we are right now, which is what happens with the liquidity stored here, what happens at the pinnacle point of that liquidity, and then if we clearly break down or break up in a given direction, that's going to be our key to follow either out or down from this point. Okay, so like I say, if you want to go and check these charts out for yourself, look at them in a bit more detail, then you can, of course, on my trading view. So let's go back to the trading view now, and we're going to check out the second idea, which is gold. So the same thing applies for gold. If you want to view this on your own time, you can. It's just on my trading view. There is literature to go with this as well, but you can see right here that we have a similar option, either a clear expansion through the high or a clear breakdown through the lows. So let's get back down onto the charts and I'll show you exactly what I'm looking at. So we're going to turn off this just to make things a bit cleaner. So notice something that's happening here. We have a very clear projection of liquidity across bullish movements, bearish movements into a new bullish movement. We now have a bearish movement down here that's been taken, and we're having a new bullish movement up. So this is what gold is great at doing, and that is building that liquidity for people to ultimately buy into a bias or sell into a bias and then be swept. So these two areas should be green, but they're red. They're areas of demand. And these are the 2 points that price is currently respecting in terms of the higher time frame structure. So based off of this principle, the projection of liquidity that we had across these lows got taken out relatively heavily, and price is making its way back up towards these points. Now we have a very high liquid point at this high, which is our 4-hour high. We also have another high internally, which is going to encourage people to place their stops within this region even more. Now, based off of the same principle, we are building a line of projection to the upside here, meaning that there is a main principle that we're looking at, which is price either pushing heavily up towards this high and failing before it takes the high, again encouraging more sell side stops to be put in place, and then we'll be looking for price to sell back down into this area of demand before traveling higher. Now, of course, at the moment we are pushing bullish, and the same goes with dollar weakness. We of course will probably see gold strength. So a clear push up to this high and a continuation through is our ultimate bullish scenario here. Now, if we don't manage to get up to this area and we just sell, let's say we sell from like around the midpoint, we'll be focusing in on this area of demand as we would be from this higher area. If this fails, then we are looking for the liquid that's stored here to be taken out, and for this area of demand, which is a very long-standing area of demand, to be the point where price begins to play higher. So it will come in like this and potentially play higher from there. Remember, our overall bias here on gold is bullish, so we are looking for price action to actually start taking these major highs out. On the daily time frame, our imbalances are bullish, so we are overall projecting to the upside. So for now, it is just a case of waiting for price to do one or the other, either sell into the area of demand or buy up and take out the high. So as always, guys, I hope you've enjoyed this video. This is our brief overview. If you'd like more context and more detail, you can, of course, join the Discord community where we walk through things live, and we, of course, follow up with our trade ideas as well. So I appreciate you all. If you have enjoyed this, please drop a like and a comment down below, and I will look forward to seeing you all in the week. Have an amazing trading week, guys. Trade safe. Have the best Monday ever, and I will catch you all in the next one. Peace out.